Good morning, traders. Here on a Saturday morning, doing review from Friday, June 16th. Gonna look at the market, go over some of what happened yesterday. So as we look at the market yesterday, it was about here. I think we were talking, and my thoughts were, this is where I want to be long, right? This is a bigger type of thing, but right, that's what we're looking for. We got the washout here. Somewhere, you can just see it, see that zoom. Uh, so that's what I was thinking. And I started planning out my business that way. This is where I want to be long. Somewhere in here. I missed this opportunity. And I missed this opportunity. And I took this opportunity. Thinking that this had taken out the high, came back down, it's going to go again. It bounced into this guy here, didn't continue. And maybe that's something I should think about. Have to look into that. In hindsight, I got stopped out, so I didn't have fun. I didn't make money, but that's okay. Hold on a second. Let me clean something up here real quick. The thing that I thought about after the day was over is just the price has been up all week long. It's just been on a tear, going up, up, and up. And so in hindsight, I was like, well, maybe they're and I was thinking about getting in again on another trade, but I'm like, this thing's just grinding people up. It's done. And I didn't want to fight it, especially around 11 o'clock. I don't like to trade this late in the day, and I got stopped out. I was done. I didn't even want to. I was just forget it. Go do something else. It's not gonna. You're not gonna. I wasn't gonna recover from anything, and as you can see, it just kind of dumped out there. So, I'm an early morning trader. I like to have the day ahead of me, the flow. But I was bummed, and then here's another thing that I noticed that I made a note about is that I was bummed that I missed this, and so I felt like I needed to justify myself in a way to get this to work, or I felt I needed to get to justify it to get to get my trade in. You ever have those feelings like, oh, I missed out, now I want to get something, and usually I do something stupid, and I'll get long on it where I should get short or something like that. And the other thing is that I probably allowed this whole thing, this double, and I'm also a lot closer. There's a lot that I really want to talk about because this is good stuff here because a lot of stuff was going through my head. I was trading this. I was looking at this and this whole structure, all this, and I don't ever really trade that structure. I usually trade, on a much smaller piece of information. And yesterday with that opening, I was like, oh yeah, I can see all this stuff happening. Well, shoot, I missed out on a lot of nice little trades because I was fixated on a bigger time frame and a bigger thing. Here's your trigger. It comes down, it bounces into this guy, right? Step one, impulse. This is like a reverse one though, because it's going up. It's coming down. It doesn't go. It doesn't make the wash, and then it tries again, and it fails. It tries again. It fails. It's a it's slightly different trade setup, but the concept is the same, right? The pressure cooker, the pressure of the sellers who's coming down, pushes back down here. This is a great long. I could have jumped in here at 9 o'clock and had my lunch and be done. So there's a lot of good lessons, especially when you lose, and that's where I've obviously you've got to go if you're going to be successful, you got to go through failure to get there. So anyhow, that's my morning lecture on loss. Um, it's good for you. So and you manage your size properly, so you're only risking a small percentage of your account size. You're only doing a little bit, so you're not getting yourself in trouble. Because I've done the other side of that. I've lost thousands trying to catch a wave or get my money back or do something stupid. Okay, so let's start out here. Go through the motions. Right, we have our impulse up. We have a shelf. Right, and I'm gonna be so annoyed because I did this. There's so many good trades in here, man. This is crazy. There's one. Right? Let's just count them up. How many trades did we miss for the day? There's one. You got another one that comes up. Boom. Impulse leg. Right? Shelf. See, and this is the beauty of being here and close. You capture it all. That one doesn't work, right? But you're at break even. So what I do is I move to break even at about 2 to 1, 1.5 to 1. Tighten it up. Don't lose your money. I would have been at break even here, and then it would have followed through. And then we have another top here. So this is the pressure. This is where we're looking for the pressure, and then look at this thing come through here, right? So we have this. I'm going to do. I'm going to take that off, and just make a note of BE. Right, and just do a 3 to 1 here. Right. Because here's the other thing. What reaction is this related to? Okay, so we have it take off here. It's coming back down. It's bounced off of this pressure cooker. There's another trade, right? Here's another 3 to 1 trade. So just in the first 15 minutes, right? 7 o'clock. All right, boom. There's my first one. I see it come up here. Oh, it comes back down. Boom. 7:15. There's my second one. I'm in. I'm out at 7:30. Right? It doesn't have to be an all-day thing. Day trading is not an all-day activity. It means you're in and out in the day. On here on the 7:50 tick, and I'm have a smaller time frame, and this is getting back to what I was saying earlier about just having a bigger a smaller picture gets you tighter to this information. I mean, I missed all this stuff because I was looking at something else. So a lot of lessons in there. And record your trades, or do something like this. Do this review, because this is helping me out. This is helping me more than it helps you. You might be like, well, I don't understand this, or I don't get that. You have to start figuring this stuff out. It took me a long, long time to be able to not buy right here, but to come back here and buy. What's it running into? Here's the box. See the big box? See the big, that's the biggest bar there. There's another big bar. Not this little guy got wiped out. This is the guy here, right? Right? Look along there. So, just some thoughts about that. I mean, I would have had a great day if I just would have stuck to my guns. And even in these little guys, right? This guy gets wiped out, pulls back down into here, right? Impulse up, hits the top, breaks this out, comes back down, boom. It's a smaller time frame, yeah, great. The other one that I kind of pay attention to is the pullback is a measured move, right? These are I'm getting too much stuff here. I don't know why that keeps doing that. Look at this recording. This right here is very common coming out of a push, right? Right? You get this move here. That's a little bigger, right? It's a little bit bigger. But just know that you've got your box right here, and your entry needs to be, if you're in here because you want to do the measured move, I do it all the time. You're down here. So you've got a whole nother piece of the puzzle that doesn't make it. Maybe that's too much risk. Maybe you want to stay within I honestly take these trades all the time, but I also will adjust a little bit. But those are common. Those measured moves. There's one. This is probably a better one, but you're still not getting 3 to 1. Well, no, you're not. Are you getting 3 to 1? You're down here somewhere. Yeah, you're getting 3 to 1. You're down below here, right? You can be under here, right there. If you would have, put it down more. Say I want to be right down in here, on that one, you would have caught that. A couple things, but just in the morning, right there, easy stuff. So then, allergies are just killing me. Sorry. Price comes off. We're not even at 7:30 yet. Price comes off. It's doing its thing. Boom, 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 boom. Up. All right. So now it breaks through here. Right. We're always looking for the breaks and the cracks. And again, this is like a reverse impulse bar. It's coming down. It's going here. Now, is it going down? Is it going up? I mean, that's, it didn't take this out. It took out the high, right? So finding the direction is always challenging, right? It's come down here, but I also know that price is just going up, right? It's been going up. So I'm kind of, hiding behind this guy here, and this is pulling in too much data. But, buying this down here is not a bad idea. There's a 3 to 1 trade right there. That's a money making trade. You don't have to be, going with all that stuff. So it comes off here. We have a little shelf again. Price taps the top. I mean, how many trades do you need a day to make a living on this? And the reason why you can confidently, I guess is the right word, is you have this box here that you're hiding behind. This thing here is these guys are buying it up and trying to take it higher. Here's another box. They're, trying to hide behind that. This one just takes off, man. That's one. 5 to 1. Oh man, I'm just beating myself up here because this is just good trading, and I wasn't in the right mindset, man. I'm telling you, sometimes you gotta be careful about that stuff. Keep the crap out. So here's another interesting one. It's an impulse out, takes out this guy. This structure is something that I've learned to see. It's a contraction that that has a high probability, and this is the key. High probability of succeeding, continuing on its way. Why? Well, it's broken out of this high here. It's tested lows. It's behind this thing here. It drops down here. Where have I gotten in on these? Is usually right. I see the up, boom. I see the shelf start. It is within itself here. Bounces into here, comes back down, and it takes off again. And now I'm not saying it's a perfectly good setup, but when it's a contraction, it makes it a little bit uh, easier to see. You know, you down here. There's another one. And it's one of the things that I've just noticed. I haven't really, um, exploited it as a true setup. I know guys that trade it all the time because it's a contraction in the movement that it's moving up. It's contracting, moving up, contracting, moving up, and until it stops, and then it's over. See how much time I got here. All right, we're almost done. And we're getting toward the end of the day. And then price comes off. It breaks this piece here, comes down. Okay, so I'm going to try and go the other way. And see, it's kind of this contraction where price is boom, boom, right? Contracts, and then it just continues. And you can come in here with a, uh, you know, one of these, and price, takes out the low, hits that. The opposite of a pressure cooker is a kill zone. A kill zone means that it's like the pressure cooker. It's got buyers and it's got seller or buyers lined up, and then if it goes past it, it's over. The move is done, right? So you can put your orders here. Just you have to figure out where you're going to get them up here. You're going to put it up above here. This right here almost hits it, but you have to wait a few more minutes to get it. And then it just happens over and over again. You have this coil, this contraction, boom, right? Just right on top of that. Same thing happened. Just hit that there, and you have to, be above the thing to get it. So, I so I was looking at this, and this is silly because I know better, but I was looking at this. I got long hair. I was like maybe right here or something like that. And then I I was like right there. See you later. So it helps to be tight because you can see the trade. I mean, there was just some really good trades before the day even got going. Right, where are we at here? Yeah, over here. And then and I kept looking back. And I know everybody does it. It's not. There's nothing wrong with it, but you have to be relative to what you're looking back on. Is all I'm saying. If you're going to use this as your guide, then really, um, you know, that's your trade. If you're coming down in here, I don't know what I missed a trade, so I was kind of doing this stuff here. So, um, just keep yourself centered by staying close and keeping your size relative to your account size, and just keep documenting and trying to figure out your best setups, and they'll come out there, man. I see them. It's just doo, boo, boo, boo. And I know that this isn't, but I was just talking about measured moves. Measured moves are often coming out of a swing, right? Out of a swing, right? They're about the same size, and as they're headed down. This one's funky, but that one's there. And they start to pop out once you start seeing them. I apologize, man. My nose is just running crazy. There's one. That one's. I tried to pull that one off. I was thinking about that, but as it came back down, I wanted to get down behind here somewhere. Anyhow, all right. Have a good weekend.